Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. Labor Day may have come and gone, but the short trading week that it created kept the IPO calendar lightly populated, though there were a couple of highlights. Firstly, SportRadar Group, a leading provider of B2B sports betting technology that encompasses software, data, and content. The business aims to increase engagement among sports fans to drive betting revenues. The business was founded back in 2001 and employs over 2,300 staff. In the last 12 months, it's generated revenues of $570.10 million and a net income of $14.40 million. SportRadar Group is looking to sell some 19 million shares in a range between $25 and $28 a share. That would raise up to $503 million and give the business a valuation of $2.10 billion. Sports betting is a sector that's attracting a lot of interest as many states lift restrictions on the practice. As such, this issue will be something of a test case of investors' appetite for businesses in an industry that was worth more than $200 billion last year. The deal is being led by JP Morgan, Morgan Stanley, Citigroup, Bank of America, and UBS, and the stock will trade under the ticker SRAD once it lists on the NASDAQ. Another interesting IPO candidate is ThoughtWorks Holdings, a global technology consultancy with an average revenue per employee of more than $100,000 per annum. Given that it has 9,000 staff and was founded back in 1993, it's one to take note of. ThoughtWorks Holdings helps its clients to utilize data assets efficiently to unlock new sources of value within their business and to respond to the demands of an increasingly digital marketplace. It operates in 17 countries around the globe. The digital transformation industry could be worth as much as $1 trillion globally by 2025, which would represent a 100% growth rate over the current spending level. The Chicago-based business is hoping to sell 36.80 million shares at between $18 and $20 a share, which at the top end of the range would raise $700 million and provide the company with a market cap a shade under $5.80 billion. The offer is being coordinated by Goldman Sachs, JP Morgan, Credit Suisse, Bank of America, and Citigroup, as well as HSBC and RBC. This is a rare example of a mature technology business coming to the market. However, it's one that operates in a rapidly expanding marketplace with some impressive headline numbers that will likely strike a chord with investors, and we would be surprised if the issue didn't go well as a result. One of the most surprising stories that broke last week was the news that Goldman Sachs would look to IPO its private equity business, Petershill, in a deal thought to be worth around $5 billion. The surprise element is that the investment banking giant, who are one of the dominant forces in U.S. IPO markets, is looking to list Petershill in London. The private equity firm has stakes in 19 alternative asset managers and will be turned into a standalone company run by Goldman Sachs Asset Management, but overseen by an independent board of directors. Petershill has $187 billion of assets under management and was founded in 2007. If the deal goes ahead, it would create the largest listed alternative asset business on the London Stock Exchange. It's also a profitable one, with distributions to the fund's partners more than doubling from $108 million in 2018 to $243 million in 2020, and then to $310 million in the last 12 months to the end of June 2021. As we've recently noted, private equity investments are scarce, and particularly those of this quality and background. The IPO is likely to be sought after wherever it's listed. Perhaps Goldman Sachs was swayed by the performance of another private equity manager, Bridgepoint, which listed in London early this year, jumping 28% above its IPO price on debut, and whose stock has gone on to trade at more than 40% above the offer price since then. Staying in London, one of the UK's most promising biotech firms, Oxford Nanopore, is said to be preparing for an IPO of its own. The company specializes in gene sequencing and is thought likely to come to the market with a valuation in the region of $3.40 billion. It's thought that Oxford Nanopore will choose to list in the UK despite the fact that Oxford-based Vaccitech, which helped to develop the AstraZeneca COVID-19 vaccine, listed in the US earlier this year. No specific pricing details have been released as yet, though the company did raise $265 million in funding earlier in 2021, with investments from TEMASEK Wellington Management and Nikon. With that kind of CV, it's another deal that's likely to be much in demand when it comes. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.